Good morning. Welcome to Market Monday for September 8th, 2025. The U.S. Open tennis tournament finished yesterday in New York City, wrapping up the final major of the year. Speaking of inflation, the signature cocktail of the tournament, the Honey Deuce, made with Grey Goose vodka, lemonade, and raspberry liqueur, garnished with 3 honeydew melon balls, of course, has an eye-popping price tag of $23. While the drink costs the same as last year, it's had 6 price hikes since 2012 and has outpaced inflation over the last decade by 50%. While it's a fun topic, it reinforces a point we've discussed on Market Monday: the propensity of upper income households to spend. Remember this? The top 20% of earners comprise 50% of all spending. This is one way that's happening in real life. And here's the tricky part. Despite the Honey Deuce having 50% higher inflation than overall inflation since 2012, over the past year, it had 0 inflation, as prices are the same this year compared to last year. So when we look at things like this, how many items are experiencing various levels of inflation? For example, most recently, 45% of items have inflation above 3% compared to December of last year, when just 40% of items had inflation above 3%. But the Honey Deuce would be right here at 0%, despite being up 64% since 2012. So bottom line, when it comes to inflation, really any economic data point, jobs like we just got on Friday, GDP, economic growth, context really matters. Time frame and perspective really matters. And we would encourage everyone to view these data releases with a giant grain of salt. Turning to the markets, we have a couple cycles to sort out. On one hand, we have year 4 of a bull market since October 2022, so we'll be entering year 4 next month. This would be the 9th time in history we've entered the 4th year of a bull market. Year 1 is clearly the strongest, coming off the lows of the bear market. So if we want to participate in all of this, we have to be invested, yes, at the bottom of the bear market. Here's the average of year 2. So this time, year 1 was weaker than average, and year 2 was stronger than average. Year 3 is usually flattish. Of course, here's tariff tantrum right here. Then back to new all-time highs. 20 of them so far this year. And year 4, on average, looks pretty similar to year 2. Although again, there are only 9 other times to compare it to, which really isn't that many. The other cycle, of course, is the 4-year presidential cycle. So far, it's tracking almost eerily close to the composite. This is the election year, so the final year of Biden's term. Here's post-election year, this year right here, historically trading down from this point till the end of the year. Next year, we get the midterm election year, which is sort of a flat to down year, 2022. And then the pre-election year, surprise, surprise, somehow finding a way to juice markets and make people feel good ahead of elections. This is just history, so no guarantees this has to happen, but it provides a framework for spotting potential bumps on the horizon. Tariff tantrum was a good trial run for when the stock market sells off. The headlines, doom and gloom, the noise. It's been a great run for the past 15 years in the stock market. It's our job as investors to manage the volatility when it comes. And your investment team will be working with you to get those exposures aligned with your goals and risk tolerance. And today, we'll leave you with Last week, the Securities and Exchange Commission, our main regulatory body, issued a statement regarding the trading of certain crypto asset products. This means crypto trading, buying Bitcoin, Ethereum, and other core crypto assets will be available to be purchased inside of your existing investment accounts sooner rather than later. Have a great week.